The stock market is crashing today. Everything's down except oil. Oil is up. Tesla missed its target, its delivery target, down 5.5% today. But my only stock that's up is ET. I looked at my portfolio and I saw ET was up. So oil, which is a hedge for the market. They say that about gold too. They say gold is a market hedge. So if the market's going down, hold gold. But generally, gold seems to move with the market. It is up today. But if you notice, this year gold hit its all-time high. It was over $200. Alex Godskin, what's up? What I like about my kind of YouTube community, it's kind of a tight-knit community. We don't have, thousands of people watching, but we have like a good 20, 30 that are always like kind of together. So you increase Chevron. You can really never go wrong with a company like that. Because even though Microsoft is such an amazing company and Meta is a great company, they are companies that sell a product, and products get displaced all the time. I don't know if you guys remember, before the internet, people used to watch VHS tapes and VCRs, and I mean that was everything. My father even started a video store where he sold VHS tapes, rented out VHS tapes to customers. It was huge. I mean, it was such a big deal that people could finally watch movies at home. It wasn't like that easy to do before VHS tapes. I mean, there was beta, but so I mean, could you imagine the people who invested in those companies, or people who bought, who sold, like my father, or other people who sold VHS players? But things get displaced all the time, even the best companies in the world. But oil just won't get displaced. Companies will come and go, but oil will always be there. And these big oil companies are kind of like I would say zero risk. I mean, of course, nothing's zero risk. There's been really big companies that went bankrupt, but when you sell a commodity, you can't really go. I mean, you could go bankrupt if there's fraud, I guess. Which companies have done. Enron was a big energy company, but they did a lot of fraud, illegal things. You can't do that. You got to run at least a legit company, or quasi-legit. But you're not going to get those 5-10x returns with a Chevron unless you time it right. If you time anything right, you could be really well off. And if you time something wrong, you can lose a lot of money with Apple. There were people just this year who threw a bunch of money into Apple and are down 20%. And that's a big drop for 2 months or 3 months, 20%. And when people see big drops, they exit. They don't wait for a rebound. They're just too scared. They think it's never going to come back, because you just read all the news. And if you see 100 news stories about how Apple will rebound, it's a great company, and then you see one person saying how Apple is going to be struggling and they may go bankrupt, that's what you focus on, that one person. You don't really listen to the other people. Yes, buying oil when oil went negative was the best thing you could have done. That is true. But I didn't buy much oil because a lot of my portfolio was down a lot. I don't usually sit on much cash. But oil, It was in April 2020. I always remember it was 1 month after March 2020 when oil hit negative. And as you know, oil was not negative. You couldn't go to the gas station and the gas attendant would pay you to take gas. So it wasn't negative. It was the options were negative. The options trading, because there was so much oil that there wasn't a place to store it. So if you had oil, you had a yeah, so it was just the options contracts. I don't want to bore you guys with that, but I just did a video on the futures, options, futures, exactly. I should do a video because and only the front expiration cycle, because it's impossible to have a negative commodity. Nothing's having negative, because that means you would have to pay somebody. I mean, that means if you sold something, you would have to pay somebody to take it. And there'll be lines around the block with people who are willing to take things, and because you're paying them to take things. But there just wasn't enough. We had so much excess oil, there wasn't enough places to store it. I bought I just did, well, that leads into Amazon, which is kind of nice. In May 2020, I dropped 100 dimes into Amazon. I kind of have my wife's portfolio, my portfolio. They're kind of separate. They're pretty separate. Yeah. She has Amazon. I went heavy Amazon, hers. I went heavy Meta on mine. So I'm up a lot. I went heavy Costco on hers. I put Energy Transfer in mine. So both are doing really well, though. Costco is doing better. So in May 2020, I kind of changed around her portfolio. I sold everything, including Apple. Probably not the best thing. I did buy back in, but in May 2020, I got, let me see how much it was, so I'm not lying to you. At 112, I got Amazon at 112 in May 2020. So it must have been like in the beginning of May. So it hit its all-time high a year later, July 2021. It's never gotten that high ever. It's still never hit that level. July 2021 was the peak. So I was really happy. We were up like, I don't know, 50%. That's true. It really is hers. She controls everything. And then as the months went on, we saw it drop to a really low level, to the 80s. So we were down like 30%. I mean, my Meta was down 70% at its worst, because I got it at, well, I bought it some at 170. So that was always in good shape. But I bought some at 330 Meta, and it was, when Meta was like 95, it was painful. But we're still holding on. We're still holding on. It's not as high it was in May 2021, but it's up 40 something percent. And I like Amazon. I think they have a really, really solid future, because, I mean, I love Meta, you know that, and I think Google is a great company, but 100% of their revenue is one thing: advertising, which isn't a bad thing. But so they're all advertising. It's literally like 99% of their revenue, both Google and Meta, is advertising revenue. They sell advertising space on a platform. But Amazon has Amazon Web Services, which I think is the future, is cloud computing. Because everybody has a everybody needs a website, whether you're a business or you're personal. And if you want to sell things on the website, you need a host. And AWS is the number one in cloud computing. Do you have any insights on Anthropic? Cloud computing. And that's really their let's see, Amazon maintains, okay, here it is. Okay, so this was updated pretty recently, so that's good. So they're 31% of the entire cloud computing market. Could you imagine how many businesses need cloud computing? Like, you know, how many websites there are? And AI won't displace that. They kind of go hand in hand. Microsoft Azure is number 2 at 24%. Google 11%, Baba 4%, Salesforce 3%, IBM 2%, Oracle 2%, and Tencent, the Chinese game company. So cloud infrastructure service revenues 74 billion and growing. The thing is, oh, here it is. The thing with Amazon's revenue from their main business, let me show you a breakdown. 530 billion of revenue, which is like, you know, I mean, how many companies are even? That's like their revenue is bigger than like pretty much every company in the world, except like maybe 30 companies have a bigger market cap than 530 billion. I mean, just their revenue is bigger than pretty much every company in the world, except maybe like 20 companies. So 530 billion of revenue in 1 year. The only company that has more revenue, does anybody know the only company that has more revenue than Amazon? There's one. Well, there's two technically, but the other, there's Walmart. Yeah, Walmart is the most revenue. But the thing is, with Walmart's revenue and also most of Amazon's revenue, it's not good revenue. Because if you, I mean, it's not, I'm not saying there's no such thing as bad revenue, but like if you say you have a business, what's going on? Say you and your friend each have a business. And you both have 100,000 revenue. Okay, you and your friend. But if you like if you have to buy something and sell it, let's just say like you have a retail grocery store, so you have 100,000 in revenue. So in order to generate that 100,000 revenue, you have to buy products. So the cost, which is, you know, cost of goods sold. So if you have a grocery store, a little small grocery store in your town, in order to sell those products, you have to buy them. So already you're probably half your revenue is already eaten up into cost of goods sold, maybe more. So even if you have, your rent is really low and you don't have any employees, you run it by yourself and maybe your son helps. And then there's other things, of course, you know, you have to pay electricity bill in your store. But even, let's just pretend you somehow have no other expenses besides COGS, which is not possible, but I'm just gonna give you the benefit of the doubt. So like the most you could possibly make is half that revenue, you can get it as profit. That's the most extreme, and it's probably a lot less than half. Probably like your margins, if you're a grocery store, is usually like 5%. But I'm just going to give you the benefit of the doubt and say it's 50%. But say your friend is just a consultant. All he does is provide his services to people. People are looking to say he's a successful entrepreneur, so he gives advice to other people. So pretty much when you give advice, he doesn't have to buy anything. He doesn't need to really do anything. He could even work out from his home. He's giving advice. So it's all margin. It's all profit. Hey, Dex. So that's what I'm saying. Like, so this is your friend's business, right? So let's just pretend his COGS is like $1,000 and just, maybe the gas to drive to certain places. I mean, so he's like all profit. So that's what I'm saying is like your revenue is not good revenue. I mean, maybe for your business, of course, the more the better revenue, but it's hard for you to make a good profit. Even if you do everything right, like you don't have any employees, you find a way to get the cheapest rent, but like your friend has great revenue because even in a really, I mean, his expenses would never get that high because it's all about his knowledge. No one, he doesn't need a fancy like store to show people his knowledge. Like, so that's what I'm saying. So let's go back to Amazon. So what I'm saying is, so the revenue in their the regular revenue and like selling on their website, the e-commerce is 350 billion. That's in North America. That's how much our revenue is. And the expenses that are tied to generating that revenue are 338 billion. So they're and the expenses in order to get that revenue is 338 billion. So the income is 15 billion. So the margins, 15 billion is a lot of revenue. I mean a lot of profit. So the margins are 4%. International it's even worse. It's negative. So they're losing money on the international business. And then the really profitable business is AWS, their cloud computing business, which is a lot lower revenue. It's only 1/4 of their North America revenue. But their profit is a lot more actually than so it's great revenue. It's a high margin, and that's what you want as a business. That's why these like the biggest companies in the world are like Google and Meta, Apple, because they just generate so much profits. Walmart will never be the biggest company in the world. It's a big company, but it's nowhere near as big as and great as these, like an Amazon. So Amazon's whole business, they only convert 6% of their revenue into profit. So it's most AWS is most of their profit. So that's all I'm saying. So if you own AWS, I mean, if you own Amazon, you really want them to grow this part of the business. You obviously want them to grow everything, but if they can grow AWS, they're going to like easily double and triple their market cap. Because if they just were to double their AWS, I mean, their income would go up 80%. Could you imagine how much stock would go up? It's kind of like Berkshire having the largest asset footprint out of the company in the world. They have the most assets, but are not the largest company based on market cap. Exactly. PDD stock is Temu. Bad revenue meaning like not easy to scale. Yeah, it's just not. It's well, not no. Well, part of it. No, it's just it's not. It's hard to make a profit. It's hard to make a lot of money. Like I said, if you have a business, I'm getting the fence redone. I'm waiting for that. Like, any business you have, whatever your business is, you want your revenue to go up, obviously, and to maintain expenses. But it's hard to make a lot of profits with certain businesses, especially businesses that are capital intensive, where you have to invest a lot. But if you provide a service, you can have much higher margins. Especially a service where you don't need to spend as much money on payroll. Like a business that has like amazing margins is like if you're a jeweler, but you're like an artist, and you could make really, really nice jewelry, like beautiful jewelry, because you can literally buy something spend $5,000, and because you're so artistic, sell it for $100,000. But not many people can do what you do because you have a special ability. But I'm not saying it's hard to scale because you can't multiply yourself by 10. I mean, you could try to teach people how to make beautiful custom-made jewelry, but it's probably a skill that's hard to transfer. So that's what I'm saying. So if you were the artist, or even like a painter, like you could, and you had $1 million in revenue, and someone else had $1 million in revenue. If you're a painter, like you don't really have to spend any money. I mean, what is it, like just some paint and a canvas? I mean, it's almost nothing, right? I mean, it's pretty much all margin once you sell it because you have this amazing ability. That's what I mean by good revenue. It's I guess not so much scaling. Just it's very high margin, very profitable. All of NVIDIA is run out of an office. NVIDIA, and I totally missed that. I'm so annoyed. I always thought NVIDIA had bad margins, but then I didn't like. They don't really manufacture much. They outsource to Taiwan Semiconductor, and Taiwan does all the manufacturing. That's why like auto manufacturers, the margins aren't that great because it's expensive to manufacture a car. It's very, could you imagine how time consuming it is and how specialized that is? I mean, manufacturing anything is not easy on a large scale, but especially something as complex as a car or a jet or something like electric in it. I mean, I think anybody can manufacture like like a chair, you could probably figure it out too. Like just go to Google, read, and try to find a company that has the ability to make things on a conveyor belt. But like, you can't just Google how to manufacture a car. Like, even if you found a company to do it, you still have to figure it out, give them a lot of help. Everywhere Amazon makes money, there are many competitors out there. What about buying land instead of stocks? I heard they aren't making any more land. Yeah, I mean, you mean buying it to put a house on it, or just buying the land and reselling it? And land doesn't depreciate. I don't know if you guys knew that. Not that it matters, but. I finally got my K1. Would anyone get Starbucks at this price? Starbucks is a great business. I really like Starbucks. But they're probably. Has it come down? Was it still 89? They probably have pretty good margin, Starbucks. I remember I bought Starbucks in like 2014. I used to have a math tutoring center, and I used to do these classes like once in a while, like maybe once or twice a year, to help kids understand the stock market. I've done different classes, but the most popular one was Stock Market 101. Usually it would be like 10 kids in the class, and it would be like 4 straight Saturdays. And what I did was, like, the first class I did, I think, was in 2014 or 15. So I bought how do stocks go up, how do they go down, what's the dividend, how to calculate a dividend. But at the end of each class, the kids had to predict the following week's Starbucks price. Whoever got closest got like a point. And it was just a good way to force them to like follow the stock. And hopefully they would follow it. And if it went up or down, we can talk about why it went up or down. Most kids just took the class and they never looked at it again. But some kids, at least the parents told me, they continued following Starbucks or other stocks. If you have so much to go around, I don't think land is the best place to put it. Yeah, I like Starbucks. Let's see. Well, the good thing is it's down like 30% or so from its peak. It's down 30%, so that's a good thing. Just in 2022, it was down to 75. It's still trading below that. But there's a lot of competition. But the great thing about Starbucks is they're kind of like the leader. They are the #1 coffee company. Is there a ticker that tracks coffee beans? Oh, there's a coffee. I bet you their stock moves with the price of the coffee bean. Did you see like cocoa prices have gone up. Cocoa prices have gone up so much that Hershey, I just saw that yesterday. Hershey is having a really hard time just staying profitable. So you can see they were tracking each other. This is the past 5 years. It's hard to go out too far because companies pay dividends. Like commodities don't pay dividends, so they're never going to track each other perfectly. But so the coffee bean, I don't know if that's coffee bean, but its ticker is it's coffee. So I think it is coffee bean. It's up 110% in 5 years. Starbucks is up 19% in 5 years. But Starbucks is a business, so of course it doesn't track it perfectly, and they do other things besides coffee. They sell snacks, and they have a huge gift card business. But that's interesting. You would think, I mean, they were pretty far apart, but the gap has come down a little bit, but they're still a bit apart. I wonder why they're so and they have negative equity. A lot of people think if you have negative equity, growing revenue, that looks really good. Their net income looks good. Operating cash flow is higher than ever, over $6 billion. Yeah, like when people ask about like, oh, would you ever buy a stock that has negative equity? And I say, yeah, I would buy Starbucks or Boeing, even though Boeing is struggling. Do you know the main reason they have negative equity? I mean, there's a lot of reasons, but the big reason they have negative equity, as opposed to any other company, there's one big reason. And I wonder, I'll give you a hint. Because obviously, let's see if anybody gets it. The reason they have negative equity. No. Now, there's one big reason they have negative equity. Oh, they completed their 10K, their annual. Because as you guys know, negative equity is when your liabilities are higher than your assets, right? So their liabilities, well, they don't. I'm looking at Amazon. That's why I'm like, well, they don't have negative equity. Starbucks. No. Gift cards. Alex, exactly. I'll show you. So this is the best liability to have. So negative equity means your liabilities, 38 billion of liabilities, right? 38 billion. Assets, 29 billion. So negative equity is when your liabilities are higher than your assets. Or to say it another way, when your assets are lower than your liabilities. So people automatically think, oh my God, they're going to go bankrupt. That's terrible. Exactly. That's why we all have so many gift cards. So they have deferred revenue of 6 billion. That's in the long-term section. So that means it's It's more than 12 months old. So that means if you buy a gift card today, okay, let's just say you bought a gift card a month ago, right? But you never used it. Yeah, it's just still in your wallet. If you bought a gift card a month ago, $100 gift card. Say you just like buying gift cards and using it when you go there instead of having to like pay each time. It's just you like it. So you bought a gift card a month ago, for $100. So your $100 is part of this 2.2 billion. This is a store value of gift cards. Now, if you bought another gift card, say 2 years ago, $100 gift card also 2 years ago, you still haven't used it. That $100 is part of this 6.1 billion. So they have over 8 billion of gift cards. See, so deferred revenue is the best liability by far, because when someone gives you money, and it's easiest to explain in the gift card, but there's other ways for deferred revenue. But the way they get deferred revenue is when somebody buys a gift card, it goes straight to the liability section of the balance sheet. And it's weird because why would if somebody gives you cash, why do you have a liability? Because your balance sheet has to balance. So somebody gives you, if you buy a $100 gift card at Starbucks, cash goes up $100 and deferred revenue goes up $100. When you use the gift card, say you use all $100 tonight, right? Then what happens? Then two things have to happen. Well, they decrease the liability $100, so this goes down 100, and then they put $100 onto the income statement as revenue. So that's how it balances. So that's the main reason they have 8 billion of deferred revenue, which happens to be their deficit, 8 billion. I mean, they do have debt, which is a lot of debt. But a lot of companies have debt. But the thing that separates them is they have so many gift cards. I guess if they lowered their debt, they would have positive equity. But another reason they also have negative equity, and the reason Boeing has negative equity is because they buy back so much stock. So you see the additional paid in capital and the retained deficit. It looks like usually this would say retained earnings, because if it said retained earnings, that means it would be positive and they would have positive earnings historically. But this is a deficit. So it looks like they've been losing money historically. They lost $8 billion operating their business. That's not true. The reason it's a deficit is because they buy back so much stock. They probably have like $50 billion of profits historically, but they bought back $58 billion of their own stock. You got a gift card at a discount? Really? Oh, you bought it online. I would definitely buy discounted Costco cards. I spent a lot on Costco. Yeah, so you see that here's the 8 billion, and this is only for the quarter, the most recent quarter. So the way they calculate the 8 billion is that to start, as of October 1st, 2023, they had a deficit of 7.3 billion. Then they had a net profit of 1 billion. But they bought back 1.2 billion of their own stock. So that decreases the retained earnings. They also paid dividends too, which also decreases the retained earnings. So the only reason they have a deficit is the two reasons are because they buy so many gift cards and they buy back so much stock. So those are good things. If a company had, a deficit and negative equity because they lose money every single year, they have negative net income every single year, that's a bad thing. Then, because at some point you have to be profitable. You can't always have negative net income. And they pretty much never have negative net income. They're always profitable. They just use the money to pay a dividend and buy back stock. And I'm sure they're also reinvesting in the business to grow it. So what's yeah, I'm getting better at explaining these things, right? That's why I try to explain as much as I can, because the first 20 times I explain it, like the first 5 times I explain it, it's okay, but it's not that easy to understand. Then the next 5 times, it's like getting a little better. And I keep kind of refining the way I explain it. Like the first time, I'm like tripping over myself and I'm trying to think. Sometimes I even say the wrong thing. I've done that before. I don't really care if Meta has dividend. Personally, I don't care. Doesn't because when I look at a company, I look at how profitable they are, and I also look at if they do pay dividend. I'll build that in, but I don't care. The only reason I'm happy, and not because I want that dividend, is because when you offer a dividend, then a whole group of investors will invest in your stock, because certain people will not invest in non-dividend stocks. There's a lot of people who are older, like retired or just older, and they just don't maybe understand the market as well, or even if they do understand it, they logically they can't invest in a stock that doesn't pay a dividend, because they think that's the only way to get a return is a dividend. So it kind of opens up your stock to all those investors too. Accounting is very logical. It takes a while to get it, but once you get it, it's very clear, and it makes a lot of sense. But it can definitely be confusing the first 100 times you do it. Yeah, so I'm happy. I'm only happy they offered a dividend because there are people who never invested in Meta before that might invest in them now because of the dividend. I mean, the past couple of weeks it's been like a little rocky, but look, I mean, it doesn't look as amazing as Nvidia, but it's close. I mean, look at that jump. And I did a video. Meta's income statement. Oh, it was November. Look, they were trading at 335, and I was $100 more. This was November 2023 when they were 335, and I was 438. And they even passed my number too. I was $100, and they ended up breaking it by 150. My biggest concern is not their financials, the fact that the younger generation does not subscribe to their platform. You know how like You know how I like Meta will buy when it hits 198 to 205. People say stuff like this, and I laugh. You missed the boat too much. Just buy. When is the right time to invest? When you have money. You can't try to time these things as much as. Yeah, I just before your video, I watched some video showing ads are going down for Meta and Google. Oh, Victor, your comment was there. Victor, you're the one that notified me of, because I don't really track my videos, because I did 1,500 videos, so I don't look at the stock price of every single video. But yeah, you notified me that I was really bullish and my price target hit. Yeah, check out Victor's channel. He does lots of due diligence. You should do another live stream, Victor. That was fun. That live stream we did. AI build out will benefit AWS, but the e-commerce business is not very profitable, and it's not profitable at all. But remember when Meta was building the metaverse, and they spent like probably $40 billion in CapEx for like a few straight years. Okay, they spent $30 billion in They spent $30 billion in CapEx. I think even before, one day spending like $40 billion in CapEx. But so people were saying how, they're wasting all this money in the metaverse, and it didn't really go anywhere. They even changed the name of the company to Meta, just to show how. But now with AI, it's all coming together. All that investment in the metaverse, with AI, it's almost like the parallels are there. They can leverage all that. That's a big reason also the stock has been going up, because people are finally realizing. I mean, they were on the AI train. The metaverse is, it's pretty much like AI. They were an AI train, what was it, 2019, 2018? And I've been saying this, that they're going to be the first company to hit 10 trillion. I've been saying that for a while, but obviously I'm really invested in them. But so, I mean, you could kind of say I'm trying to pump the stock up, but I've owned it for many years. I bought it the first day they started trading in 2012. So obviously I'm going to pump them up. But if I didn't have faith in the company, I would not. I would probably sell it. I sold a lot of stocks, and I just lost faith in the company. But you know how you look at a company, like when companies acquire other companies, lots of people think, oh, they acquired this company. That's good. They're going to be this huge company. And that could be the case. Like Pfizer's really, really struggling. Their stock is down 50% in a few years. They're still a big company, but they're really, really struggling. So you have to do something. You can't just do the same thing you've always done. Even if you feel that what you've always done is the smart move to do, things will turn around. You have to do something different, or people will lose faith in the company. So what do? You either start offering drastically new products, or you acquire somebody. And that's what they did. They acquired Seagen as a huge acquisition. Pfizer pays a big dividend. they do pay a really big dividend. So they acquired CGen. So people are saying, "Oh, this is great. They acquired CGen," but just acquiring a company, that doesn't mean you're brilliant. You're doing a great job at running a business. You have to integrate that acquisition into your company, and then hopefully grow the company more than if you didn't have them in the first place, and make a good return. And I do think it's going to be a good acquisition, CGen. But obviously, not every acquisition is good. Remember, like AT&T acquired Time Warner for like $100 billion, and 3 years later they sold it for like $30 billion. But Meta acquired Instagram. Like, what an amazing! I think that's the best acquisition ever. In terms of return, like they spent it was $1 billion, the acquisition, and I'm gonna say Instagram, if it was running on its own, like it was its own company, it would be close to like $500 billion. If it was its own company, but it's not its own company. It's just part of Meta, so it's lumped in with Facebook, WhatsApp, all their many products. So that's like a 500x return. But like if you invest $1,000, I guess that is a pretty big return. Like if you put $100 into something and you got a 500x return, say you put $100 into NVIDIA, when they started trading, and then you waited 20 years and you got 50K, it would be amazing return, but it's not life-changing. It's not like you can now retire. If you put 1,000, you're getting close to life-changing, but still definitely not retire. But you'd be extremely happy. But if you put 10,000 into NVIDIA and waited 25 years or 20 years, now you're getting close to life-changing. Not in California. I couldn't retire on $5 million in California. I could, but I wouldn't be like living a lavish lifestyle. I would just be able to pay my bills and go on a small vacation each year. But if I put 100K into NVIDIA and waited 2 decades, that's life-changing. That would change my life. Pretty much anyone here. But that's like what Meta did. They invested $1 billion, which is a lot of money, even for Meta. And this was, a while ago. $1 billion is not like chump change. But that's like us putting $100,000 into a stock is equivalent to like Meta putting $1 billion into an acquisition. I mean, they could have acquired another company for $50 million. That's a lot cheaper than $1 billion. But they went all in on $1 billion, and they got a 500x return. But how many times would you have seen that NVIDIA was a sell in 25 years? Yeah, I know. I mean, it'd be hard to predict. But I guess it's the same thing as like, how did Meta know Instagram would be, grow 500x? I mean, would they have grown that much if the parent wasn't Meta? If it was just on its own entity? Probably not. It's a lot easier to grow when your parent has billions and billions of dollars, and they do the same thing you do, just on a larger scale. I think Google a double click for ads is the best return. I'm not talking about like percentages, because like I said, like if you can invest $1,000. Like I'd rather invest like if you invested $1,000 into a stock and got $500,000, that's great. Of course, that's an amazing return. But $1,000 isn't a lot to start with. But even if you got a 100x return, so if you put 50K into like Apple in like in 90, you didn't have to go that far back. If they 95 or something, 50K, you'd have 5 million. It 100x. So like say this is your investment and your friend. I'm sure your friend is happy to make 500K on $1,000 investment, but your investment is a lot better because it's pretty much life changing. Even though you invested $50,000 more than he did, it's life changing. So I'm not just talking about percentages, because your friend has a much better percent. He 500x his investment, you only 100x. So I think coupling the two things together, have an amazing return and also a large investment. Okay, Victor, I'll see you later. Yeah, email me and we'll talk about it. Double click. Double click. I remember when I worked at JP Morgan Chase, right above us was DoubleClick. And this was back in 2003, 2004. So in 2007, Google acquired DoubleClick for $3 billion. That's more than I thought it was going to be, $3 billion. The deal raised concerns surrounding competition. In May 2007, I'm sure it was a good return, but it probably wasn't as good as Instagram. I don't know how much DoubleClick will be worth today. Google. Are you saying the best return in terms of percentages or the best return in terms of dollar amount? Google's bought DoubleClick for $3 billion as a return of $180 billion. Well, Android, that's a big return. 50 million to 112 billion. That's pretty. $50 million. $112 billion. Sheesh, that's a big. Can't even fit it on my screen. That's a, sheesh, 223,000% return. That's a big return. So what do you guys think of Amazon? Do you think it's a buy at these levels? I mean, with AI and cloud computing, it seems like a buy, right? Net sales. Oh, okay. Okay. So in the fourth quarter, 170 billion in revenue. That's the highest ever for a quarter. North America 62%, international 14%, international 24%. So AWS is 14%, 24 billion. And then trailing 12 months, 575 billion. 61% is North America. When it says North America and international, it's mainly referring to its website, Amazon.com website, like the e-commerce. AWS is always separate. So AWS is US and international. AWS can be any country. Operating income 13 billion. That's just for the quarter. Also their biggest number ever. Okay, for the trailing 12 months, 37 billion. So for the quarter, 13 billion. If you annualize that, that's 52 billion. So really have a few hundred shares, literally never selling this. Yeah, I bought mine in 2020 at 112. So I'm planning to hold indefinitely. I just can't imagine them being displaced. They have too much going for them. I just hope they can focus more on AWS because that's where all the profits are. Like half their cash flow and profit is from AWS. Net income 10 billion. Is that for the quarter? Yeah, just for the quarter, 10 billion. It was 278 million the prior year. I wonder, they must have had a write down. So 10 billion, if you annualize that, it's 40 billion. And 30 billion for the whole year. But that's just how it is. Especially a company like this, they're going to have so much revenue in the fourth quarter because of the holidays. So most companies have their best quarter as the fourth quarter. Some companies actually, it's half their revenue and half their profits. I even heard of companies up to 70% of their revenue and profits in the fourth quarter. And the first 3 quarters are just kind of a break even. They're not that extreme. 30%, 33%. Let's see. Let's do the math. Let's see what percent of their revenue is fourth quarter. So 35% of their revenue is in the fourth quarter. I wish they give numbers here, but if you add this plus this plus this plus this, it equals. No, sorry. If you add this plus this plus this plus this, it equals 30.4 billion. When did you buy Coral, dude? Your few hundred shares. What year? It's really grown a lot. They had a negative last Q4. They had negative net income. It includes a pre-tax valuation gain of 0.8 billion. You will likely see some products that looked uninteresting. They have added cloud, which has wildly impressive performance. Yeah, cloud that's where most of their returns are. Cloud computing. I wish I could just do live streams every day instead of going to work. One day. I actually tried to do that. I sold my business in 2021 and I was going to just do YouTube, but I got so bored after 3 months. Claude is the Anthropic AI model. Jean-Claude Van Damme. Bezos has been selling a lot more Amazon stock than he typically does. Not sure. Yeah, that is concerning when you see Zuckerberg and Bezos selling a lot of their stock. I just think the stock is high, and you should be selling when it's high, not when it's low. And he owns 10% of the company, I think. So I mean, when will he take in those gains and get some, get some money for working hard? Even when he sells, he still has 9% of the company. He still has 937 million shares. So when he sells 5 million, it's just like, it's like 5. Let's see, 937, 1, 2, 3, 1, 2, 3. It's like if we have 10,000 shares, just say we had 10,000 shares. How much are they trading at? $180. Let's just say we had 10,000 shares just for fun. Oh, come on already. That's a lot. 1.8 million. Let's just say we had 1,000 shares. Okay. That's more realistic. That's about what I have, actually. I think I have like 800 shares. But anyways, let me just give you the scale. Jeff Bezos, Amazon. Bezos wraps up $50 million Amazon stock sale. I don't know what time frame this is. Come on. Let's just pretend this is in a year. 50 million. I thought. I put 93 million. It's 937 million. I missed a zero. I'm gonna get rid of Discord. There's too many scammers on there. I don't really use it anymore because there's so many scammers. So 50 million. So just to put in perspective, let's just pretend you got not like when Bezos started the company. Let's just pretend he had 937 million shares when he started. I know he had more, and it was trades up and down. Let's just pretend, and this was in 1994. And in 1994, you heard of this company, Amazon. Maybe you knew Jeff Bezos personally, and that's why you invested in the company. Or maybe you just thought it sounded cool. Somebody selling books online, whatever it might be. So you bought 1,000 shares. Obviously, you paid probably like $500 or $200 because you probably bought like 10 shares, but it's been split so many times. So you invested like $50 on these 1,000 shares. You probably bought like I said, 50. And after all the splits, as of today, 2024, you have 1,000 shares at $108 a share. So you have $180,000 worth of stock, and you initially put $20 into it. So if you sell 53 shares, you would get $9,600. That's the same thing as him selling 50 million shares. You sold 5% of your portfolio. I mean, if you were in it for 30 years, don't you think you deserve to take something from it? Some people would have, almost nobody would have sat on it for 30 years. Most people, once it went up 20%, they sell it. But I'm just saying, this is what happened. He has it for a long time. I know he's made a lot of money with it, but I got to delete Discord. I actually deleted the app from my phone because I couldn't stand, but I'm going to make a note to delete Discord. It's just so many scammers. So that's what the equivalent, it sounds a lot, 50 million shares. It's 5% of his portfolio, but it's equivalent to you selling 53 shares if you had 180K in a company. So he just wants to get some cash and not have it all sit in stock. And he's not even running the company anymore. He's probably just a consultant or a board member. Segment results international. So you can see their international business, they always have a loss. The last 5 quarters, they had a loss. So in this most recent quarter, 40 billion of revenue, a loss of 400 million, a loss of 400 million. So they're always running at a loss, but that doesn't mean it's not a cash loss. They have positive cash flow because part of the loss is depreciation and stock-based compensation. So if you strip out those things, it's okay. Yeah, I don't use it much, but I'm definitely on X. So for the trailing 12 months, so this is where their money maker is, AWS. So for the most recent quarter, 24 billion, 7 billion of operating income. So that's where most of their income is. And that's the most ever. And you can see revenue, unfortunately, is not really going up that much. It's only up 13% year over year. But you can see their income is up a lot. Because it's a profitable business. You don't have to buy all those, it's payroll, R&D, but you don't have to buy products, and you don't have to there's not as much maintenance for AWS as there is for their margins have improved a lot though, and they're much more profitable because if you look, this is Q4 2022. Operating income is a really good measure to track. If if you want to see how profitable, it's better than net income. Net income, there could be like lots of like one-off items, like an asset impairment that can skew net income or tax benefit. So their margins are up a lot. It went from 24% operating margin to 30%. Like their revenue grew 13%. It says that right here, 13%. But their operating income, it's right here. They already have it for us. Is 38%. It grew. So much more profitable, much better margins. Free cash flow, it was negative in the fourth quarter of 2022. Now it's positive 37 billion. So they've done a good job. They've been really reducing expenses. You think Amazon could ever get broken up? Yeah. I mean, unfortunately, the government sometimes doesn't like when companies have too much control. But if they did get broken up, you wouldn't like lose out. Like if you own a share of Amazon at 180 a share, if they broke it up into 3 companies, you would get a piece of all 3. It's not like you would, but it might not work as well if it was broken up. Why though would they Google Cloud and Azure a ton more and Walmart and Target? What's the question? Why though would they there Google Cloud and Azure and a ton of? Well, if they did, they probably have the cloud business separate from the e-commerce business. This is a good picture. I always forget the stats. Why would they get broken up? I mean, I don't think they will, but I'm saying there's a decent chance. The bigger you get, the more likely the government will interfere. Like Bill Gates said that about Microsoft, 10, 15 years ago, that the government tried to limit their growth because they were getting too big and powerful. And Gates said Apple wouldn't have passed them in market cap if they were able to continue growing and getting into the phone business. But the government didn't want them to have the control. Imagine how they were as big as the iPhone and Apple wasn't as big. They would control the world. It's just, they don't like monopolies, even though it's not really a monopoly, because anybody can, start a business and compete. And we have the option, like for the iPhone, I don't have to get an iPhone. People prefer it because it's better. They like it better. A lot of things they like about it. Monopoly means there's no other option. You have to get it. There's a monopoly on most electricity and gas. It's more of a government monopoly. So monopoly is there's no option. You have to buy it, and then therefore there's total price control. Say there was one company in your town that owned all the gas stations, and for some reason it was illegal for any other company to sell gas. That would be a total monopoly, and you're forced to buy gas from that company or drive. Say you lived 50 miles to the next town, or wait all that time. So they can jack up the price. Like they could raise it from like $5 a gallon, and they could raise it to $7 a gallon because they know you're not going to go to the next town and pay $5 because the amount of money you have to waste to drive there and back and the time. So that's what a monopoly is. Like you have no choice, but we have a choice. We don't have to buy an iPhone. We choose to buy an iPhone. Like we don't have to. Most things we have a choice. It's just we like it better. That's FTC just opened a case for Apple as monopoly. I bet they don't do anything though. They do this. Yeah, they do this all the time. People complain. People always complain about things like about anything, not just about like businesses. People complain about the police. They complain about businesses. It's not fair that these people make so much money and I don't make as much money as these people. Why do they get $1 million bonus? I don't get a bonus. They should give me their money. So the government has to kind of do something just to show they're doing something. Free cash flow, less equipment finance, lease, and principal payments, and all of these. So free cash flow, $35 billion. Yeah, big negative last year. So their common shares are actually up. It was 10.2 billion. Now it's 10.4 billion. So, I mean, you'd like to see it go down. Apple does a really good job at bringing down their shares. Why are their shares up? Did they do a big acquisition? That's generally why shares go up, is when a company does an acquisition, like a really big one. They need to take on debt or dilute shareholders to get money. Look how much they acquire, probably like 50 companies a year. Okay, so it was the Anthropic acquisition. That was the big one. They must talk about it. Okay, in 2023, we invested $1.25 billion in a note from Anthropic, which is convertible into equity. We have an agreement that expires in Q1 to invest an additional $2.75 billion in a second convertible note. In Q3, we invested $1.25 billion note. So they bought debt from Anthropic, and the debt is probably going to convert to equity. So they'll own part of Anthropic. The note is classified as available for sale and reported as fair value. The note is level 3. We have an agreement that expires Q1 2024 to invest an additional $2.75 billion in a second convertible note. We also have a commercial arrangement primarily for the provision of AWS cloud services, which includes the use of AWS chips. Equity investments in private companies which we do not have the ability to exercise significant. I wonder where I'll be right back. I got to just check if somebody's supposed to put up a new fence in our backyard. Okay, not too many people left. Sounds like Scott is bullish on lumber. If he's getting definitely bullish. That's why I wanted to look into housing stocks, home builders, and then companies that supply things like lumber, wood. Yeah, I think that's a good investment. I never really looked into Anthropic too much. Anthropic has developed a family of large language models named Claude. Anthropic raised $1.5 billion in September. Amazon announced an investment. They're private, right? This was followed by a $2 billion commitment from Google. Wow, $2 billion from Google. Menlo, $750 million. Menlo is a pretty big venture capitalist. The investment was done in the form of an SPE, special purpose entity. We should call them SPV, to consolidate several small investments. In total, they received $7 billion. Wow, $7 billion in 1 year. They were founded just 3 years ago. They've really done a good job at growing. Siblings Daniela, the latter of whom started AI's. Impressive stuff. So yeah, so let's so Apple. Okay, operating cash flow. Look how much operating cash flow it almost doubled in a year, 46 billion to 85 billion. That's another reason their stock has gone up a lot the past few months. I mean, whose stock hasn't gone up, I guess, besides Apple? Apple and Tesla have gone down, right, in the past year. But they've really gone up a lot because they've been really focusing on cost cutting, like Meta did. I don't know. Do you think it's a good time to buy Apple? I'm like, I want to buy it, but it's kind of like when Meta went down to like 90. Like, it seems so obvious now. We should have bought it, but at the time, it's kind of like you always think it's going to keep going down, so you don't want to buy it. Like, I'm going to wait. I'm going to wait till it goes down to 70. Every time it goes down, it went down to 200. I'm going to wait till it goes down to 150. I'm going to wait till it goes. I don't want to put NVIDIA on here because then you can't see the other numbers because it's too like extreme. So in 5 years, Tesla is up the most, 800%, because it was so low 5 years ago. And then Amazon's up 96% in 5 years. It's hard to even see these. Microsoft 250%. In 2 years, though, Meta's up 120%. Tesla is down 54% in 2 years. Apple's down 3% in 2 years. They're down in 2 years. Isn't that crazy to think that Apple is down in 2 years, and yet we have the biggest market run ever? The market's at all-time high. So we don't need. Am I missing somebody? Google. Tesla stock made a lot of fanboys millionaires. If they sold it, the problem is a lot of people just don't sell. So Google is up 10% in 5 years, only 10%. Microsoft is up 36%. That's staying strong. In the past year, though, Meta is up 133%. They've really done well in the past year. My Meta shares I bought in 2017 are up almost 300%. Amazon is 75%. So in the past year, Amazon is up more than anybody of these companies except Meta. So Amazon is really doing a good job. And you can't just say the market's up, so it's no big deal. They are beating the market. The market is not up 75%. What is it up in the past year? 30%? Maybe 40%? Well, we could show the S&P 500, so we don't have to guess. The S&P 500 is up 26%. The S&P 500 is up 14%. Microsoft is up 36%. Tesla's down. They really came down a lot. Michael Berry kept shorting them, lost billions. Now he's finally, I don't know if he's still shorting them, but so year to date, which is just 4 months, right? Oh, no, 3 months. Year to date, Meta's up 40%. Amazon's doing really well, up 19%. Let's look in the past month. Google's up 12% in the past month. Yeah, Google's been up. Why is Google up so much? Is it because of the news with the government? Oh, AI? $10.30. It's interesting. Spiders is I think pretty much flat, up 1% in the past month. So yeah, so they've done a great job at like maintaining expenses. So that's why they have $36 billion of free cash flow in the fourth quarter. And the way you get the free cash flow is you operating cash flow minus CapEx. They also take into account the repayments on finance leases. And this is their 10K. So they're 575 billion. This is their income statement on a 10K. 575 billion. That's 2023 revenue. In case you're curious, most revenue company. They're third, I think, in terms of revenue in the world. Walmart's number one. The thing about Walmart, even though they have the most revenue, they have really, really slim margins, like 3%. I mean, so 3% of 600 billion is great. But if you're like NVIDIA, NVIDIA has like 50% of like 100 billion. So, I mean, they have really good margins, NVIDIA. Google dropped because of their AI rollout. Right, that's why they dropped. But I'm saying this month they're up 11%, and everybody else is down or flat. But the past year they've dropped because of the AI rollout. But I was just wondering why this week they're up so much. This month, I mean. Do you guys ever look at the conversations on Yahoo Finance? Some of it's interesting, but it's not. It's some of it's old, so you gotta. You could. I guess you could sort it. We closing green. Knock knock. Who's there? Google. A lot of junk though. Feel bad for anyone that fell for the fake. Above the opening price, trying to go green. Okay, I guess that's not much information. We were at the largest companies. So Walmart is the most revenue of any company in the world, most employees out of any company in the world. I think like the US government employs more people. I think so, but of public companies, publicly traded companies, they're the most employees. Saudi Aramco. Yeah, sometimes I get good information from the because it's hard to like know everything. Like when I do a video, people always say, "Oh, but you didn't mention this." It's just hard to just keep track of everything. I guess if my entire life was that one company, then yeah, I guess I would know everything about that one company. But I look at other companies and I work and live a normal life. So I mean, you can't know everything about everything, but so you got to hand it to Walmart. They employ 2.1 million people, which is bigger than almost any city in the United States. It's a lot of people to employ. I'm sure, every time I say stuff like that, people will go, "Oh yeah, but they don't treat their employees well. They don't pay them. They don't, the conditions aren't so great." But then you don't work there. I mean, it's not like you have to work at Walmart. I mean, it might be the biggest employer in your town, but you can find another job or you can move. I know that's not easy, but you don't have to. You choose to probably because it's the best. It's the best of the worst. Wow, new member. Thank you, Blade. I appreciate that. That's awesome. Saudi Aramco, which recently went public, I believe. But they're mostly state-owned. They're owned by the Saudi government. Saudi was ranked as second largest public company in the world. When did they go public? It must have been real recent. 2019. Since 2018, Saudi Arabia has been considering to put a portion of Saudi Aramco's ownership, up to 5%, onto public trading via staged IPO. On December 29th, Saudi Aramco priced its offering at 32 riyals per share. The company generates subscriptions of total amounts 19 billion. So it was 2019. I thought it was more recent. Saudi Aramco. So we can't buy it in the United States. They only trade in Saudi Arabia. 26 billion market cap, because they didn't list the entire company. They listed 5% of the company. Aramco is the largest company in the world that I am aware of. Only a small portion of the company is public. I thought Apple passed them a few years ago. Even if they company. I thought like Saudi Aramco is around a little under 2 trillion, like the whole company. Microsoft is back to number 1, then Apple, but these are public. Then Nvidia. Okay, here it is. It's 2 trillion. Yeah, I knew it was around 2 trillion. So 26.7 billion. Okay, what's the exchange rate for Saudi riyals to US dollars? One real is 0.27 US dollars. I guess because it's 5% of the company, I guess you have to multiply that by 20. That's 534 billion. So I don't know how to do that. Maybe it's not 5%, but I know for a while Saudi was number 1, but for about 5 years now, they haven't been number 1 because they're around 2 trillion. Yeah, that's what I'm trying to calculate it, but this 26 billion is 5% of their company. But when I multiply 26 by 20 to make it 100%, it's 500 billion. But I know Saudi Aramco, for a while, they say it's valued around 2 trillion. I've always seen that for Saudi Aramco. And then when Apple passed 2 trillion, Apple became the largest company in the world. Apple even hit 3 trillion. Apple came down. Microsoft is now 3 trillion. $3 trillion. I've been buying in Microsoft too. I hope it keeps going up. Okay, so what's the next? Okay, so 574 billion market cap revenue. So here's a breakdown of their revenue. So 231 billion is in their stores. So that's on the website. So when you buy things on the website, like the fees they take, 231 billion. They also have physical stores. So if you order something on their website and go and pick it up at a store, that's online sales still. Physical store is only when you go to the store and buy it at the store. I thought they only had like stores where you can pick up packages. I didn't know they had stores for selling stuff. Well, I guess if you go to those stores, I've been to those stores before when I picked up things I ordered online, but they were selling stuff too in the store. So I guess if I bought something in the store like say I picked up my package that I bought online, but say I see something in the store that I like. If I bought something in that store, it would be the physical store one. And third-party seller services. So I know a lot of people use Amazon as their business. They just open an Amazon account and start selling stuff. Some people do arbitrage, online arbitrage, where they buy something from someone else on Amazon or eBay and then resell it. I tried to do that. I didn't have any success with that. Advertising, which is like 9% of their revenue, 99% of Meta's revenue and Google's revenue is advertising. But this company, it's only 9% of their revenue advertising, 47 billion of advertising. This is advertising to sellers, vendors, publishers, authors, and others. And that's if you see an ad on Amazon or a video on Amazon, and then you click the video and it goes to a website with somebody selling something, the person who put that video on Amazon has to pay. That's part of the 47 billion. Amazon Prime, 40 billion. That's up. But online stores isn't up really. It's almost flat. What is it up like? 5%? I've heard of that. People selling things online. I just couldn't do it. I kept trying, but I couldn't really make much money. The thing was the shipping ate up all my margins. Like if I bought something for like $5, I'd sell it for like $8. It would cost like all my profit would be in shipping. So I would never seem to make much. It almost seemed like the only way I could make money is I'd have to get the product for either free or close to free. The only way it seemed like I can make any money, because if I sell it for $5 and spend $4 in shipping, so my theory was the people who make money on Amazon and eBay steal the items, like they work in stores somewhere. And they steal stuff while their friends steal. That's only I don't understand how they could have made money unless they get stuff like a huge discount or it's free. Subscription services, that's Amazon. So AWS is the best. That's grown 50% from 60 billion to 90 billion. And other is 5 billion. And other is when they license video content, also healthcare services, shipping, and credit cards. So most of their revenue is in the US, 400 billion. I didn't realize till I did a video, 38 billion is Germany. Do you know why they have such a big presence in Germany? 38 billion. That's their biggest country outside the US, then the UK, Japan, and all other countries. Total segment excludes corporate assets. Okay, so these are assets. Okay, the assets of 527 billion, 200 billion in North America, 100 billion AWS. And here's property and equipment. So that's 94 billion in North America, 24 billion in international, 72 billion AWS. And this is depreciation and amortization. That's the end. Let me go back. We didn't. Do you guys ever try to read a 10K? It'll put you to sleep. It's so hard to read it. It's so dry and boring. I mean, I've tried, and you just don't feel like you're retaining anything. It's just like you're reading it, and then you're thinking about something else while you're reading it. We seek to be Earth's most customer-centric company. They have 4 principles: customer obsession rather than competitor focus, passion for invention, commitment to operational excellence, and long-term thinking. So it's so dry and boring. It's so hard to, and it's a lot of fluff. It's hard to know what to look for to really figure out what's human capital. Our employees are critical. That's a 1.5 million employees. So that's pretty much more than anybody else, except Walmart. So Amazon is 5th largest employer in the world. India, which is the largest country in the world, they're pretty much the same size as China. Their government employs 3 million people. The US government also employs 3 million people. China, the government of China employs 2.5 million people. But the largest public company, like excluding governments, is Walmart, then Amazon. Foxconn is a Taiwanese company. They employ over 1 million people. I never even heard of Foxconn. Foxconn. They don't trade in the United States. That's probably why I didn't hear them. 91 billion market cap. It's a big company. Foxconn makes the iPhones for Apple. Really? Wow. So Walmart, Amazon, China, National Petroleum, State Grid, Foxconn, China Post, Accenture's up there. They have 720,000 employees. Volkswagen, the German automobile maker, 680,000. The United States Postal Service, why are they part of this? Shouldn't they be? I guess the U.S. Postal Service is not a government company. It's like quasi-government. It's a private business. They're a private business that seeks to make a profit. I think they're for profit. They're not even. For the nonprofit boating safety and education organization. Okay. Amazon maintains that the Postal Service makes a profit from its contract with the company. Okay. This separates private communications, the ability for profit and nonprofit. Yeah, it's is the post office nonprofit? I'm pretty sure it's for profit. According to the laws under which now it operates, the U.S. Postal Service is a semi-independent federal agency. Yeah, it's not like a totally for-profit business like an Amazon. It's kind of like it gets some funding, mandated to be revenue neutral. That is, it is supposed to break even, not make a profit. There was some partnerships between U.S. PS and UPS. Yeah, I'm sure there were. Where are these? Oh shit. Okay, Jeff Bezos. So he's not the CEO. He's just like executive chair. So he's on the board. Andy Jassy is the CEO of the company. He took over. And there's always CEO of different areas or departments. Like you have the CEO of Amazon Web Services, which is the most important job in the company. And then you have, you can have 1,000 vice presidents at any company. He founded in '94 and served as executive chair since 2021. He was chair of the board. He was CEO from '96 to 2021. Yeah. So until 2021, he was CEO. Then Doug Harrington. Okay. Do you ever read these risk factors? It always makes it sound like things may be bad for the company when you read the risk factors, but they have to do this. They have to mention like what could go wrong. We face intense competition. We continue to intensify. Our international operations expose us to a number of risks. They have an operating loss every quarter in international. Our international activities are significant to our revenues, profits, and we plan to expand further. In certain international market segments, we have relatively little operating experience and may not benefit. They must mention somewhere where they don't make any money on international. So we are impacted by fraudulent or unlawful activities of sellers. So people can sell fake stuff. They try to weed those people out, but they get through. The law relating to the liability of online service providers is currently unsettled. We face risks related to adequately protecting our IP rights. Foreign exchange risk. Operating risks. We experience significant fluctuation in operating results and growth rate. We face risks related to successfully optimizing our fulfillment. We could be harmed by data loss or other security breaches. You're really kind of boring stuff. I guess it's helpful to know this stuff, to know what could happen. But these are usually kind of like extreme situations. We have processes in place for assessing, identifying, and managing material risks from potential unauthorized occurrences on or through our electronic information systems. So cybersecurity, people can hack into Amazon and steal their credit cards, your credit cards. They have a lot of office space. This is the square footage. And this is in thousands. So if office space in North America are 30 million square feet, they own 9 million of those square feet. So that's an asset if they own it. If they don't own it, they lease it. International, they have 25 million square feet of office space. Physical stores, So lots of cities, especially big cities, have an Amazon store where you can go to pick up your package or actually buy things. 23 million square feet. They don't really have any international stores. Fulfillment data centers, 400 million square feet of fulfillment data centers. ARLP. Alliance Resource Partners. I looked at this before, I think. Such a high dividend and only a 58% payout ratio. So that's how you know if they can afford the dividend, if the payout ratio is below 100%. Payout ratio is dividend over net income. So the yield was 20% in 2019, dropped to 5%, and now it's back up to double digits again. 14% dividend. Is this sustainable? Well, they always pay a dividend, so it's not like they cut their dividend. Here's a dividend payment. They cut it. It looks like they didn't pay a dividend in 2020. So I don't know why the line should have went to zero. Right now, they're paying 70 cents in the most recent quarter, 70 cents per share. And they paid 70 cents for 5 straight quarters. It was 10 cents. So you own this stock, Alliance Resource Partners? Oh, this is an MLP. Usually MLPs pay a higher dividend. Generates income from coal production and oil and gas mineral interests. It's a coal miner. It engaged in production and marketing of coal. The company produces a diverse range of thermal and metallurgical coal with varying sulfur and heat contents. They supply coal for major U.S. utilities and industrial users. Yeah, coal is cool. Okay. Yeah, that's what, anytime you invest in a company that's in the oil business, it's kind of generally a pretty safe bet, and you get a good dividend. Let's see if they have any. I like the investor presentations. It's more user friendly. It gives you Nikosi, thank you. Appreciate it. Why is this not opening up? Okay, maybe I have to download it. I did a video on Chewy today and Amazon. What do you think of Chewy? Chewy's a good company. It's a good business model. About half the sales for pet food, the online sales for pet food is through Chewy. That's a big market. Pet food sales. So they're a master limited partnership, which means they have to distribute at least 90% of their profits back to their investors in the form of a dividend. So they have at least 90% they have to give back. So that's why companies like this generally aren't able to scale and grow as much, because they can't use the cash flows to grow the business. They have to give it out as dividends. So they need to take on more debt in order to grow. Or I guess issue more shares too. But I think mainly debt is the big historical cash distributions. So you can see the distributions historically. They're up to $4.1 billion in 2023. That's their dividends they paid out. But if it's going up, which is good, but you should also see the shares outstanding, because if they're increasing their shares a lot, you would of course expect them to pay more dividends, but each shareholder is getting less payment per share. So $2.80 per share. MLPs don't have shares. They don't issue stock. They issue units, because you don't own stock in a company. You own units in the MLP. What's up, Chris? Yeah, I've always hit the keyboard pretty hard. No, this is holding up pretty well. I mean, this is not a keyboard. What is keyboard? But it's part of the computer. It's not like separate. This is a cool computer. It has 2 screens. Oh boy, it has 2 screens. It's expensive. It was like $5,000 for the computer. Okay. Coal mining. They're the largest coal producer in eastern U.S. They operate 7 underground mining complexes, expecting to sell 34 to 35 million tons in 2024. Royalties. They receive royalties from mineral interests in oil and gas basins and coal mineral sources. New ventures, next generation. Largest coal. Okay. They have 7 underground complexes in Illinois, Indiana, Kentucky, Maryland, Pennsylvania, West Virginia. They produce a diverse range of thermal and metallurgical coals with high heat content, with unique access to both domestic and export markets. Customers include major domestic and international utilities and industrial users. Hey, Kyle, what's up? So 81% of their coal is sold in the U.S., 12% exported, and 7% uncommitted. Yeah, I mean, it could get a little hairy looking through all this stuff. A lot going on. Like, I mean, I want to do a better job at learning about the contracts. I try to read it, but I get a little confused sometimes. There's a lot of just so much information to read. But it's good to understand their contracts, because if a contract has a long lifespan, that's kind of like consistent revenue. That's kind of locked in. But if contracts expire, and a lot of these companies hold reserves. Like if a company mines gold, they don't usually sell everything they mine, they produce. They hold it in reserves, and they're more likely to sell it when prices increase. And they'll sell less when prices are low. You always have to sell something just to get some revenue and pay your expenses. But if the price of like gold gets really low, they'll sell a lot less, as opposed to if the price of gold is really high. Because there's a like a fixed cost to creating something. Like if it cost you $500 an ounce to pull the gold, as long as gold is selling for more than 500 an ounce, you can make money. But if it's selling for less, okay, here's some. I like the financials. It's just much easier to read. Oil, these are royalties. 1.5 million barrels of oil royalties. Natural gas. MCF is million cubic feet, I think. No, 1,000 cubic feet. I can't remember. And here's their coal operations, like how many tons of coal by, look, Illinois basin, that's the big one, 25 billion. 25 million short tons. Okay. Appalachian. None. You ever see those YouTube videos on the people who live in Appalachians? Like how they're so poor and some are inbred. I don't know if that's true. I'm just saying that's what I see on YouTube sometimes. Coal sales price per ton. So in Illinois, it's 55, the price per ton. Appalachia, it's 80 per ton. I don't understand why it's so different. Sale price per ton is defined as total coal sales revenue divided by tons sold. It's so much lower in Illinois. It must be a lower quality in Illinois as compared to Appalachia. Does anybody know why it's so different, the sale price in Illinois compared to Appalachia? The EBITDA per ton is also a lot lower in Illinois. It's like 35 compared to 55. They sell a lot more in Illinois. In the fourth quarter, 6.4 billion. Um, 6.4 million tons sold. $130 million adjusted EBITDA. Only 30 million in Appalachia. I guess because they sell in such bulk, I guess that's the only thing that would make sense to me. Because if you make like, say you sell batteries. If you sell batteries, you know, say it cost you $1 to make one battery. You know, the payroll and the materials to make one battery. And say you have two customers, like Jim's Hardware, which is like your neighbor in your town where you manufacture. And every month he buys 1,000 batteries. And you charge him $3 per battery. So your revenue is $3,000 with him. But then Walmart, which is about, if you're in Arkansas, and Walmart is 50 miles north, the headquarters, and they buy 1 million batteries. Obviously, you can't. They're gonna want the best deal, so they pay $2 per. So the cost per battery is much higher for Jim because he only buys 1,000 batteries a month, but Walmart buys 1 million a month, so they're lower. So I guess that's why Illinois, it's a sale price is $55, and Appalachia 77. So they must sell it in really large quantities, or it's just lower quality, which is definitely possible. Because the EBITDA is still much higher, even though they sell a lot less. I mean, the price is a lot less. They sell triple the coal. BOE sold. That's barrels. That's barrels. Barrels of oil equivalent. 0.8. So 800,000 barrels sold in a quarter. Average sale price $45. EBITDA 31 million. Royalties 10 million. So it seems profitable, right? So as long as they can maintain, as long as they have enough cash flow, 95 million of operating cash flow, as long as they have enough cash flow to pay the dividend, then I guess take it, right? And another thing to look at is just if the stock goes down a lot, then your the dividend, even if you get 10% dividend, even if you get 100% dividend, if you bought a stock today and 3 months later it was zero, you lost 75% of your investment because you got 25% from the dividend, 100% annualized, 25%, but you lost 100% of your investment. So probably moves at oil. See how the red line is oil? Okay, I gotta go. The fence guys are here. I'm getting new fence. So if you want to invest in lumber, thanks for joining. It was a fun stream, and leave a comment. Talk to you soon.